Hello, and welcome to The Beat with Ben. I'm Ben Hunnicky, Head of Investment Management at Morgan Stanley. With me today is Jitania Kandhari, Deputy CIO of the Solutions and Multi-Asset Group, Portfolio Manager of the Passport Equity Strategy, and Head of Macro and Thematic Research for Emerging Market Equity. Today we'll talk about geopolitical, economic, and generational shifts on the markets as Jitania shares her philosophy and explores key market themes. Welcome, Jitania. So obviously volatile start to the market. This year, you recently came out with your themes for investing. Maybe before we get into that, take us through your investment philosophy and how that served the team well in this volatile market.
I think there are two parts of the philosophy for international markets, specifically both top-down and bottom-up. So we aim to derive 50% of our alpha from top-down decisions and 50% from bottom-up decisions. What is the top-down? Macro and thematic matters. And in my learnings over the years, in emerging markets, country decisions matter. In developed market, industries and sector decisions matter. And I think that is the overarching top-down thinking. On the bottom-up side, we are core investors. We are neither growth nor value. We buy value when there's a catalyst to unlock that value, and we buy growth at a reasonable price. So there is no style bias in our investing. And lastly, I'd say currencies are not a byproduct of the investment decisions. It's an integral part of the process because in international markets specifically, over the history of the MSCI indices, currencies can contribute on average to a third of total returns. And that has become more and more relevant in today's world. So I'd say that these are like the key pillars of our philosophy.
So maybe with that framework, starting with the themes, Mag 7's been a really popular theme, maybe falling out of favor. Talk about the themes that you're looking at to invest behind as we head into the rest of 2025.
Yeah, I just say US at 65% of ACWI market cap is at its peak that it was in the 1970s when you had the two oil crises and then Japan taking over when US actually underperformed. Even in the 2000s, US underperformed. So the 65% with this kind of geopolitical environment, I had talked about too much linear thinking on US exceptionalism, the anti-immigration, anti-establishment, anti-elitism is going to drive both local policy and foreign policy globally. And the track record on tariff subsidies and sanctions historically has been very debatable. So that's the overarching piece. Within that, I think the global edge, which I had talked about, i.e. looking outside the US for opportunities, is getting more and more compelling. I'd say three themes: AI, domestic financials in different countries, and geopolitical hedges in the portfolio. So AI, I think it's time to move from AI enablers to AI adopters. And what do I mean by adopters? Industry experts, i.e. software companies or digital platforms in industry verticals like cybersecurity, enterprise solutions, healthcare, industrial software, gaming, music, travel. These users of AI that will use AI in scale to enhance their offerings is the way to invest from here. So not just creating the AI, but the usage of AI at a mega scale. And that's going to drive efficiencies in these companies. Geopolitical hedges, you have to own these. I think gas is going to become an integral part of the US trade negotiations on a bilateral level with countries. We own gas stocks. They also have a good yield. Cybersecurity, defense, because corporate and government security are becoming of prime importance with increased threat vectors globally. And gold, i.e. gold stocks. I still think there's value in them. And lastly, I'd say a lot of countries in the world are having different economic cycles with much more fiscal and monetary policy impulses in a positive way compared to the US. So in Europe, for example, core Europe with the stimulus, but peripheral Europe that has spent the last decade deleveraging is looking very interesting for a new credit cycle in these deleveraged pockets of the world. And Eastern Europe in the emerging markets, which link into the Western European story. Countries like India that are more domestic demand oriented, or even countries like Brazil where US has a trade surplus and they are not in the eye of the storm, can be interesting areas to look.
So for an investor that's been US biased in terms of their portfolio construction, you think now's an attractive time to be thinking ex-US?
I think then diversify to multiply. And I think you can buy the same themes that the US is plugged into by owning some of these global companies that are playing these similar themes but at much lower valuations. And as I mentioned, with a currency upside. US may relatively underperform and you could still own a diverse basket in the US, but I think channeling some of that investment internationally into developed international markets, into emerging markets, there couldn't have been a better time.
So you mentioned AI, and obviously ex-US, difficult to talk about AI as a global theme without discussing China, DeepSeek. How do you see AI developing ex-US, and how does China play a role in the global development of AI?
I think DeepSeek's news from China was a great development from the private sector, just when the public sector in China has been struggling with addressing the over-indebtedness and the over-investment in the economy. So it has been a positive development for starters. And I'd say that the DeepSeek is in some way signifying the commoditization to some extent in the AI innovation, which happens with all past tech innovations. It's a low-cost, high-efficiency model, and China being a digitized economy, the consumer-facing AI applications will clearly be the winners here, and they will be able to really harness that AI efficiency in their business models. Our team has been excited about this dual AI ecosystem, one in the West and one in China, just like we had two internets with the US and with the Chinese internet behind their...
You think AI follows a similar path?
Yeah, I think there are these two ecosystems. And again, it is creating opportunities within the China sphere, within the Asian sphere. And we have been picking stocks and, international ideas are emerging in that space.
So maybe moving on from China, in Asia, difficult to talk about global investing without, and all the changes that have happened in China, without talking about India. How do you view India as an investable market today?
Yeah, so I'd say, if China created the factory of the world, India's creating the digital office of the world. So that's been a really good anchor for their external accounts. But from a structural perspective, I think as China is rebalancing, India is building. And India is a story with low GDP per capita, so low-hanging fruit to start with. Also has a reform agenda that has been put in place. Reforms will always work with a lag. It has a deleveraged banking, household and corporate sector. It has spent the last decade deleveraging, so a new credit cycle should emerge. The macro is been amazing with the fiscal, with the monetary policy now actually being tailwinds from here. And in this multipolar world, I think India is in a geopolitical sweet spot and not really directly in the trade war.
I was going to ask about the trade deficit and talking about the potential tariff war between U.S. and China. Does India benefit from a manufacturing perspective as supply chains diversify potentially away from China?
Yes, we're seeing that with the Apple supply chain. We're seeing that in some petrochemicals, pharmaceuticals. Still want to see more of it in the hard numbers. Anecdotally, you hear of things like drone testing happening for the defense side in private companies. So really would like to see that, but it definitely has gained share because you've seen an increase in India's share in global exports. So that is clearly happening.
So from your title, you obviously fill a number of different roles at the firm. Clearly a thought leader when it comes to investing in emerging markets, but maybe take us through your role and how you've taken on these responsibilities at the firm.
Yeah, I'd say, Ben, three roles, but one philosophy. Macro matters. Macro and thematic research have been the foundation of my career. I've spent a big chunk of my career trying to assess the big picture and then spot where the world's heading and then put money where my mouth is, right? So I started off in India, where I belong, very passionate about the emerging market asset class. I wanted to do more, so I did Asia then came to the US to do Latin America with a fund based out of Berkeley, and then came back to Morgan Stanley to do emerging markets. A few years ago, I put my hand up to run the international strategy, which was the Barton Big strategy. I'm very passionate about emerging and international markets. And then a few years ago, a lot of all this macro country thematic came to the asset allocation table in our meetings, in our client interaction, and in our thought leadership pieces, both with the big picture and tales of the emerging world.
Well, it seems like a lot. It seems like you've grown into a lot of roles at the firm. How do you think about balancing all the different roles that you fulfill?
I think that, like I said, I think they are very complementary and synergistic, and they feed off each other. They make me sharper every day. As I've evolved through the roles, I've built a team. I call them my alpha squad. We make each other sharp every day, trying to create experts in different regions and different themes, and it's a diverse team. It's a democratic team. We have a lot of arguments, but that's controlled arguments is great for risk management. So I do rely on them for a lot of that support. And I do feel like I said that, it's one overarching philosophy that feeds into all these artilleries, as I'd say, across the firm.
That's great, Jitania. So maybe one question, if you weren't busy with all of these roles at Morgan Stanley, what would you be doing?
I'd be a singer. I trained in Indian classical singing. It's a big part of my life.
I won't put you on the spot.
Yeah, I think there's melody and rhythm in music and markets.
Wonderful. Thanks. Maybe that's a good note to end it on. Thanks for being here, Jitania.
Thanks.
So we hope today's discussion provided you with a deeper understanding of emerging markets and some of the key themes we're focused on. Be sure to subscribe to The Beat and stay up to date with our latest investment ideas.